Welcome back, cool cats. This is quite possibly the most complex analysis I've done so far, so we're skipping the intro and getting right into the technicals. Nothing that I share is financial advice, and you should always consult a licensed financial advisor before making any financial decisions. Looking at the 4-hour, we have multiple nested patterns, aka patterns within patterns. So let's start in the middle and move out. SPY is in this minor bullish channel in yellow, and it pushed off of the lower support line around 521 on Friday. Moving out, there is this ascending resistance line in light blue that is going up to intersect this main resistance line in yellow that has been causing every sell-off since February 21st, as you can see right here. It has yet to be tested to confirm if it's legit yet, but there may also be a lower support line here in light blue, which combined with this upper resistance line would form a bearish megaphone pattern. But we can also draw a descending resistance line in purple that starts from April 2nd and connects to the high of April 9th. The lower support line in purple would begin on April 7th and connects to the price action on April 9th as well. And both of these lines appear to converge around April 22nd. And if this is a legitimate symmetrical triangle pattern, we could expect to break one way or another by around April 16th or 17th, which would be roughly the 80 to 90% completion mark of the pattern. If this is a legitimate symmetrical triangle that's in play, it indicates roughly an 80-point move from the breakout or the breakdown. So let's say the market breaks out on April 17th, around 524, that would be targeting about 605 on SPY. If instead we broke down around 504, when we zoom out on the daily, we can see that it would be targeting around 423, which if we look left, we can see that that's a pretty decent level. But something to remember that I always point out is that symmetrical triangles are notorious for false breaks, so there is the potential it breaks one of these trend lines, gives the appearance that the market is about to rocket or tank, and then swings aggressively the other way. And this is why I hate symmetrical triangles, because they're often unpredictable. Now back to this bearish megaphone, potentially in light blue. If that's what's actually in play and not the symmetrical triangle, then the breakout or the breakdown target is undefined until it breaks either the upper resistance, which is very unlikely, or the lower support line, which is more likely. You would then take your measured move from the top of the trend line to the bottom of the trend line upon the breakout or breakdown to get your measured move. A conservative target would be the measurement from the top of the pattern and the bottom of the pattern at the beginning. So if it were to break down, it could be targeting at least about 450, or it could be targeting about 650 to the upside. And it all depends on where it would break. And now, to confuse everyone a little bit more, there is the possibility that this main downtrend line in yellow and the lower support line of this extended bullish channel here is actually forming a much wider bullish megaphone pattern. In which case, if this resistance line breaks, we actually would be likely to revisit all-time highs. And even on a bigger picture, SPY is bouncing off of the lower support line of this multi-year channel around 481 at the same time that the weekly RSI was the lowest that it's obviously been in years. Every time that that's happened, we've seen a strong rally. But at the same time, every time that we've touched this even more significant resistance line in red, it has forced SPY all the way down to the most significant support line in teal, which could potentially take SPY all the way down to the 380s, which is also an extremely important multi-month demand zone. And unfortunately, I think so much depends on the next social media post or headline, which makes trading this madness even harder. Switching over to SPX on the monthly time frame, if you doubt that it's possible that SPY could actually drop that far, as I've covered multiple times before, we even hit the most ever significant resistance line on SPX that goes back to the Great Depression of 1929. Touching that line indicates that SPX could go as low as about 2,300 to 2,400 if history repeats. And the 4200s would just be a stopping point before going even lower. Markets move in cycles that cannot be broken, so unfortunately this is a possibility, although it would take years to play out. And the only way that it doesn't play out is if that resistance line can be broken for the first time in decades, in forever, and flipped into support. If you're a long-term investor, your best bet is to dollar cost average at key support levels and hope for the best. We're seeing the same structures on QQQ, so let's just go over the levels and skip the explanations. It also has a minor bullish channel here in orange and will likely hit this purple resistance line around 462. If we're dealing with a symmetrical triangle, the breakout or breakdown target would be roughly about 78 points. So if the market broke the resistance line of this pattern on April 17th around 453, QQQ could go up to about 530, which would actually place it back above the support line of its multi-year bullish channel in purple that goes back to October of 2023 and arguably even back to June of 2023. If instead it breaks the lower support line around 431, it could take QQQ as low as about 355. That would have QQQ breaking the lower support line of its major bullish channel that goes all the way back to October of 2008 and would be very close to this significant level around 342 to 343. While we're already zoomed out on the weekly, I want you to notice this. Remember that RSI symmetrical triangle that I've been covering multiple times before? Well, it's getting very close to retesting the previous support line, and if that now acts as resistance, we can expect to see more downside on QQQ. And I'm obviously not able to provide minute-by-minute updates on what I'm seeing, although I do try to provide timely updates on social, including StockTwits and X, as soon as I see them. And this is why it's so important that you learn how to analyze not only the charts, but understand how certain catalysts are going to move the markets on your own. And every one of my videos is designed to show the process, not just give you up and down targets. We can see clearly that IWM formed a double top on the monthly time frame and rejected. And the monthly RSI is almost into oversold condition, but at 33, it could actually move a little bit lower. However, IWM got down into this strong demand zone and bounced off of this key level of roughly 171 that I called out in my previous video. And I think there's a few possibilities that could play out for IWM. Either it sees a V-shaped recovery back up to retest this supply zone between about 208 to 215, or it consolidates between this roughly 175 to 200 level for at least a few weeks before making a decision. And we can't rule out that it's going to go down and try to retest this key level of roughly 162 to grab more liquidity. Zooming into the 4-hour time frame to get some more clarity though, the bear flag here that I called out, it played out and it even overshot to the downside. And we can see the same strong resistance line from February 21st, just like we do on SPY and QQQ here in yellow. And there is this lower descending support line in light blue that connects the lows from March 4th, April 7th, and April 9th. And notice also how between the 7th and the 9th, IWM actually made a lower low, not a higher low like on SPY and QQQ. Is IWM telling us that the market really is in a megaphone pattern? And if so, the bullish channel that it's in orange could intersect with this yellow resistance line, which also intersects with the key level of about 200 even, and then we could see IWM head aggressively down to about 158 to 162 if this resistance holds. If IWM breaks this key level, however, it opens the door to the supply zone that I mentioned up here, and possibly even the previous support line of the bullish channel around 228 to 230. If you're getting value out of my videos and posts on social, please like and share this video, and don't forget to sub and tap for notifications so you won't miss these market moving insights. And I try to explain how I'm actually identifying patterns and targets and the reasoning behind everything in every video. So if you find that helpful, I would love to earn your sub. I've got a lot that I need to share on Dixie, the dollar strength index. It's extremely important, so this is not a part that you want to skip. Looking at the 1-hour time frame, the symmetrical triangle that I posted played out to the downside and even overshot the target a little bit. I've shared this before, but we've got to revisit this. There is an over decades long bullish channel on Dixie that goes back to March of 2009. If we zoom in, notice just how close Dixie actually is now to touching that lower support line in teal and the convergence of this other previous resistance line in yellow. If Dixie continues to fall, it will be very likely to bounce aggressively off of the convergence of these two lines, which would be around 97 even. But if we zoom further out, if support cannot hold there, notice what type of pattern the upper resistance line in red forms with the lower support line in teal, a symmetrical triangle. You do not want that support line to break, because if it does, it could signal the absolute collapse of the US dollar, and a measured move indicates that a breakdown of roughly 45 points could occur, or taking us down to about 52, likely over the course of multiple years. That would likely signal the end of the US dollar as the world's reserve currency, and if just a single point move on Dixie can affect the markets so aggressively, I can't imagine what 45 points would do. And what's also concerning is that whether this pattern breaks to the upside or to the downside, an extremely strong dollar or an extremely weak dollar would be catastrophic for the world. Zoom in all the way out to the yearly time frame. This pattern took 25 years to build. So it would conservatively take about 8 years to play out, or roughly around 2033. And let me be clear, we do not want that support breaking, and yet it's hard to ignore just how close we are to the apex. The support and the resistance lines will converge around 2031. And patterns often break out or break down when they're roughly about the 80 to 90% way of completion, and we're almost there. And I had previously shared this pattern in my SPY and QQQ bounce, followed by Volmageddon 2.0 video linked above. Zooming back in on the 4-hour time frame, there's something I have to share because I just find it so interesting. This right here was the spike in Dixie on November 5th, 2024, when Trump got elected, and the dollar continued building strength until January 20th, when Trump finally got sworn in as president, and when this big rising wedge here in light blue that I kept pointing out finally started playing out. And we did come back up when we retested this supply zone, but we rejected and continued this downtrend. So Dixie has been in this wide bearish channel in light blue ever since, until it finally broke below the channel support recently, retested it once, and couldn't get above. And all I know is that Dixie is barreling towards this multi-year support line, and once it hits, we better hope that it reverses from there. And I would absolutely love to hear your all's thoughts in the comments below. Do you think the US dollar is going to lose its world reserve status in the next few years and cause complete global restructuring, or perhaps something else entirely? Looking at the VIX on the 1 hour, as I've been sharing on social, there's the possibility that the VIX could be forming either a symmetrical triangle with the upper resistance line here in green and this lower support line in purple, or a bullish megaphone pattern with the upper resistance in green and the lower support in green. This ascending support line in purple starts on April 2nd, just like what we see on SPY and QQQ with their resistance lines. And it appears that the VIX was beginning to break that support line on Friday, so now I'm watching to see, do we get a strong bounce when we hit the descending support line in green, likely around 25 to 26, if it drops fast enough? If we do, it could lead me to believe that the megaphone really is what's in play instead of a symmetrical triangle, in which case we would likely see a strong rally on the markets on Monday and possibly Tuesday. Then we could see the market sell off again as the VIX rallies. And I think it's most likely that if the VIX is going to rally and not get crushed, I would expect to see it bounce sharply off of this previous multi-year resistance line in dark red, which would be around 2150 to 22 and could happen as early as Tuesday morning. And just for reference, zooming out on the weekly, this is that resistance line that I'm talking about. It was just never broken before, or at least never held above, and we've been holding above it multiple weeks now. Zooming back in on the 1 hour time frame, on the flip side, if the VIX breaks this descending support line and invalidates it, we could have a symmetrical triangle in play. And if the multi-year resistance line doesn't hold up as support, the measured move of this symmetrical triangle indicates a drop of about 35 points. Considering that it's breaking support around 3750, that would mean that the VIX could go as low as about 3 even. If we zoom all the way out on the weekly, we can see that is the lowest that it would have ever been. On the other hand, if this is a false breakdown on Friday, which happens often with symmetrical triangles, it could have the VIX breaking the resistance line of the pattern around 50 to 53, which could take it up into the high 80s. Zooming out on the monthly just to show you, the last 2 times that it got that high were in the 2008 financial crisis and in March of 2020 during peak fear of the pandemic. The highest it's ever gotten was about 173 during Black Monday. If you've been following my channel, you know about this very bearish rising wedge on Bitcoin that's multiple months long. This goes all the way back to March of 2024, and it's potentially targeting at Bitcoin around 59 to 60,000. And if you don't think that's possible, please check out my previous videos. Zooming in on the daily, similar to pretty much the whole rest of the market, Bitcoin also has a descending resistance line here in yellow that starts on February 21st. You can see that it's hit it and rejected off of it 3 times already, but the most recent rejection was far less aggressive than before. And if it breaks this downtrend line, it's likely to open the door to about 89,000, then possibly even 93 to 95,000. Zooming in on the 4-hour time frame, we can see that Bitcoin formed a double bottom on Tuesday, close to around 75,000. However, look what Bitcoin has formed right up into that key resistance line in yellow, a bearish rising wedge. And if we take a measured move from top to bottom, it gives us a target of about an 8,000 point drop. If this plays out from where we are right now, it could take Bitcoin down to about 77,000, which is obviously a pretty big demand zone. And if that level were to break, it absolutely could open the door to the lower support line of this bullish channel that would be around 69,000. As I shared in recent posts, U.S. Treasury yields across the entire curve were rapidly rising, which many speculate is why Trump quote-unquote blinked and put tariffs on hold. For years now, historical buyers of U.S. Treasuries have been buying less, including Japan and China. From what I've heard, the recent sell-off of Treasuries may have been done partly by hedge funds in trouble, as well as Japan. On the weekly time frame, we have to be mindful of this very bearish channel in light blue that goes all the way back to March of 2020. And I don't think it's just a coincidence that when they turned the money printers on in an unprecedented way to bail out the economy and markets, that U.S. bonds began getting devalued very consistently. There is also this very significant descending resistance line here in purple as well that TLT tried to climb above last week and failed to do so. But it did manage to make a higher low. Zooming in on the daily time frame, it also used this previous resistance line of this descending channel in light green around 85 as support. But then it hit that purple resistance line around 87 and rejected slightly. If TLT can get above this resistance line, it opens the door to retest around 88 to 88.50. And if that level can be broken, it could open the door to roughly about 90 even, and then all the way up to about 92. Zooming in on the 4-hour time frame, just like we potentially see on the VIX, TLT also appears to be forming a symmetrical triangle here in purple, whose apex is actually on Monday. And the measured move from this indicates that TLT is either about to move up or down about 6 points. That's a pretty major move in a short amount of time. So that could place TLT around 92 or down to about 79, literally within a couple of days. And this is just adding more confluence to the patterns that we're already seeing on things like SPY, QQQ, and the VIX. And someone asked what my concerns were that have prevented me from buying TLT, and here's my thoughts. Countries historically inflate away their debt rather than default, which means the value of the dollar is likely to continue to fall. If more countries buy less US debt, that will force yields up, and especially if they start dumping their treasuries on top of that, like the dreaded bond vigilante. And as yields rise, bond prices drop. In the current economic environment, I think that's actually a possibility. The Fed is the buyer of last resort, and if they were forced to buy the US government's debt, they would have to crank up the money printers, which would further devalue the dollar. In other words, I think that US Treasuries may not be the safe space that they once were, especially if the world moves closer to deglobalization. And on the flip side, the euro-dollar system creates intense demand for the US dollar and dollar-denominated assets. So unless the US dollar loses its world reserve status, there should be continued demand for years. It's really kind of a toss-up. And I think a lot of it really, truly depends on what other countries are willing to do and make deals with the US, or have we already done too much damage? Looking at the chart for crude oil futures on a weekly time frame, this is a reminder for anyone who missed my last videos. This pattern on crude oil futures indicates that crude oil could go to roughly $1 a barrel. And that would mean the absolute shutdown of basically everything in the world, probably including no electricity. And we've got to hope and pray that this pattern doesn't play out and that this was just a false breakdown here. There may be hope that this was all a false breakdown. On the 4-hour time frame, we can see this inverted head and shoulders pattern right here. If it can break this resistance line in purple around 62.80 to 63, the measured move could take oil back up to roughly about $71 a barrel and back above the support line of that pattern. However, if oil goes to retest that support line around 64.50 and rejects, it could absolutely confirm that the pattern is legit and we may see oil head way lower. And what's concerning to me is also this RSI pattern. You've got this initial bullish divergence followed by a second double bottom. And this is the same type of diminishing returns pattern that I've shared before and even shared on SPY and QQQ, which was followed by further downside. If this pattern plays out, I will feel even more blessed that we own a little bit of land and have chickens. Just saying. On the weekly time frame for COPX, which is for copper miners, and I'm using it as a proxy for copper demand, we've got a similar pattern going on here, which if this plays out, it would be targeting roughly about 15, which is levels that haven't been seen last since 2020. Zooming in on the 4-hour time frame, we can see that COPX broke this minor resistance line in purple and retested it around 32.70 and confirmed it as support. COPX has to get back above the lower support line of that pattern around 38 to 39 and flip it into support to invalidate the move down. And there is a demand zone on COPX between about 25 to roughly 29. But same as on crude oil futures, I'm seeing this RSI pattern here, indicating potentially diminished returns. We had a double bottom, another sort of divergence, and a third divergence. Usually what follows after that is one more divergence where the bulls try to push higher and fail to do so. So this tells me it's absolutely possible that this actually fails to break this level. If you don't already, I would highly recommend using investing.com's or another service's economic calendar to keep an eye on upcoming economic catalysts. And I also love Moomoo's earnings calendar, which is going to be very important in the coming weeks. And if you're interested in joining Moomoo, I have included my referral link in the description below. If you add at least $100 to your account, we will both get rewards whether you trade or not. And of course, trading and investing involves many, many inherent risks. Stick around for today's trading rule to live by. Best of luck, cool cats, and God bless.